All right, today is going to be a fun one. It is a special episode featuring Amy Bridges from CPA.com. If you don't know Amy, she's been with CPA.com for about 6 years, is a senior manager in their practice development department, and was one of the many masterminds behind the CPA.com CAS Benchmark Survey for 2024. So Amy and I are going to have a nice long conversation about insights that came out of the survey methodology, and how CAS practitioners can start to think about their growth as they approach 2025. So I've got a copy of the CAS Benchmark Survey in front of me here. I will be linking to this and many other resources in the show notes so that you can take those for reference, check them out. And without further ado, let me get Amy on. Our data science department focuses heavily on the process of taking raw data, turning that into insights, which then drive action, which then results in a value. And like that data value chain is so critically important. And so we spend a lot of time talking about that. But I think that's a story that comes out of this CAS benchmark survey.
And that's the way we wrote the report.
Yeah. So you've been with CPA.com for coming on 6 years.
Coming up on 6 years, yes.
And coming from a history of spending a lot of time in the education sector.
Absolutely. I mean, I worked with software companies. I taught high school. I taught at the college level. I've done an awful lot of adult training all down through the years. But much of that came from a place of trying to use data to support what we were doing.
Yeah.
You know, understanding the data around training and the data around education to make better decisions about how to help people learn and how to help people adopt software, how to help companies, decide how to use their educational dollars. My master's degree focused on assessment. So, this assessment space, the survey space is near and dear to me.
Yeah. And you know that I'm a big believer in data. And
I know, I love this. I'm so excited about our conversations every time.
The power that data can have when it's harnessed well, when it's aggregated correctly, and then it outputs something that you could potentially argue the output of like how the data is actually correlated, but you can't actually argue the raw data itself. And so you could, right? But if it's done correctly and you're just gathering raw data points, yes, you can argue the inputs that come into that. How many respondents were there to survey? What were the demographic data behind that? You can always go 16 layers deep. And so it's so fascinating to me when you're capable of harnessing data like this, how it can actually create value to the recipients of the data. And so I'm curious, you spend a lot of time at CPA.com now with firms, with practice development in a lot of areas of CPA.com, and you've started to lead the efforts on this CAS benchmarking survey. What is that like for you? What's the process to put this together?
It's a lift. And this is the 4th survey that we've done. I was very fortunate to come into CPA.com on the tail end of the first survey. So kudos to the people that originally, decided that this was something that was needed in the client advisory, or at the time, client accounting and advisory services space. We were spending a lot of time trying to make decisions based on just anecdotal data. And we realized that really starting to do a bigger survey was going to help us understand trends, understand really the spectrum of what was happening. So those first surveys were put together based on, what do we think we need to know? And when I look back at the first survey now, I think, this was a fantastic effort. But the way that we asked a lot of those questions was still, frankly, through a lens of what was happening in traditional CPA firms in the way that they had historically looked at tax and audit. The second year, we sat down and we said, based on what we learned in the first year, how do we want to change these questions? The third survey that we did, we actually brought in a survey methodologist who helped us really talk about and look at the way we wanted to structure those questions. And then this year, I had the delight of being able to work with Bill Reeb, who is with Succession Institute. He's a former chair of the AICPA and has a lifetime of consulting experience through his lens as a CPA, working with CPA firms around strategy and governance and change, right? Because so much of what's happening with CAS is change. So he and I said, what if we could start from scratch? What if we could start with a blank sheet of paper? And those were fun conversations to be able to say, what do we think is happening in CAS? We could create some hypotheses. What would those hypotheses be? We actually had several hypotheses that were all around the fact that there is so much more opportunity. And so we tried to put some structure around those hypotheses. And then we built some questions to really try to ask the question to say, do we have support for this hypothesis? Sure. Getting participation is probably the first of the heavy lifts.
Sure.
So we felt really excited this year that our participation did go up, not quite as much as we wanted it to. But what we found was that the quality of the participation, so the number of new firms participating in the survey was fairly significant. And what we discovered was that the firms that were participating this year are really coming closer to hitting the mark around the AICPA and CPA.com definition of CAS. So we talk about CAS being really what starts at the end of bookkeeping and then all the way up a spectrum to include some business insights advisory work.
Okay.
And in previous surveys, we'd seen an awful lot of firms that were doing work that looked like annual tax cleanup. They were doing work that looked like one-off advisory. This is really valuable work. It is, when I say it's not CAS, I don't mean to say that it's not good work, but it's not standardized in the way that client advisory services really begins to bring value. And as a result, what we saw in those early surveys was such a mishmash of firms all kind of coming to the table, really almost asking the question, is this CAS?
Yeah.
So this year, when we saw an uptick in our numbers, but then this big uptick in the quality of the data, we started to do the analysis and said, we really have something here.
Yeah.
What we've got this year is pretty good.
I wonder to what extent. So I remember 12 years ago in public accounting, I was in financial audit. And then over the summers, you either participate in benefit plan audits or you kind of slot in wherever the firm needed you. And one of the options of being slotted in was in what was effectively their CAS department. But at the time, it was like, it wasn't called that. It was just maybe outsourced accounting, if that. And so over the course of the last 12 years, even the last 4 years or 5 years that the survey's been around, you probably have more folks that have created delineation between, tax advisory or just a bookkeeping cleanup engagement to this is now CAS. Where historically, under most firms' hourly billing models, the tax manager would go in and clean stuff up, work with the team. They just bill hourly and is all part of the tax engagement. Do you think that split maybe into more CAS-specific service offerings has enabled you to have higher quality data?
One of the interesting things that we've learned from the CAS Benchmark Survey is that when we look at what we were talking about at CPA.com 12 years ago, we had a big campaign around transforming your bookkeeping practice. The CAS Benchmark Survey in the first year and really in the second year, we realized that transforming a bookkeeping practice into CAS was probably not a best practice. So that idea of being able to use staff who were working in other areas who could come in the summer and do tax cleanup or do other big kinds of project work, that was part of this concept of transforming a bookkeeping practice into CAS. The CAS Benchmark Survey helped CPA.com and AICPA realize that there's a place for bookkeeping and tax cleanup and project work. And some of that lives under CAS and some of it doesn't.
Yeah.
And so what we have seen with practices that have really spun up in the last 5-6 years is that we're starting to see a best practice, which is preserve your bookkeeping. That work has value to your clients. That work has value to your firm. Preserve the way that you use your staff when you have capacity to do other projects. That work has value to clients. That work has value to the firm. Don't try to create that as part of your standardized process that lives under CAS. And so what we see in this benchmark survey is over and over, firms who have dedicated CAS staff that are not being shared across the firm are better able to standardize their processes. Their margins are higher. Their revenues are higher. Just all the data looks better. We also see that those are the firms who are able to really start to offer services to clients that hit multiple points along that spectrum. They're not bound to sort of the transactional accounting and controllership level work because they have the people and they have the resources and they have the training and upskilling and the time and the process and the standardized process to be able to do more CFO level work, more proactive business insights work. A lot of what you talk about in the way that you've kind of built what you're doing right now.
Yeah. And I feel like, and I'm biased because I'm running an independent CAS practice, but I feel like over the last 3 to 5 years, the rise of standalone CAS practices has grown incredibly quickly. And I suspect a lot of the respondents are likely running CAS only shops and not just CAS practices within a larger firm. Is that what you saw as well?
So I don't know that I would say that the rise is quite as big as what you and I perhaps perceive it as.
True.
I don't think the data necessarily bears that out. We are seeing more standalone CAS. We are seeing more firms that are actually spinning this off just from an independence kind of point of view too, right? Like that is another consideration around this. But I do think that we are seeing a lot of success. One of the questions that I get asked fairly regularly is around whether or not you have to be a really large firm to have a successful CAS practice. Because we are aware, I mean, in the profession, everybody knows about some of these, top 20 firms who have really fantastic, successful CAS practices.
Totally.
I'm here to tell you that the best practices and the top performers in this survey actually live below that. There is something to be said for being able to be agile, being able to be focused, and being able to make those decisions that are reactive to the trends in the market to allow you to put yourself in a proactive space with your client. And I think that not small firms, but smaller firms that are not necessarily top 100 have a unique ability to do that when they have a plan, they have a strategy, and everybody is on board.
Yeah. And I feel like it's one of those things too where, I've had a number of conversation with CAS leaders of large firms, and I've been fortunate to just sit alongside of many of these folks and listen to their pain points, listen to how they're building. And oftentimes they do lament that it is somewhat difficult to push change through just because of the more bureaucratic decision making that comes with larger firms. However, you see other CAS practices in top 10, top 20 firms who are given a lot of autonomy and decision making and strategy for their CAS department, and they are moving quick. And so I think it's maybe less dependent upon the size of firm and more dependent upon what ownership of decision making are you allowing the leaders within your CAS department to take, which small firms innately have just by nature of being small.
Absolutely. We laid out the way that we presented the information from this benchmark survey this year around the concept of 7 big insights, because we really wanted the benchmark survey report to be actionable. We wanted this to be something that was not a read that you turn around and put it on the shelf, but rather, you can actually take something and do it. So these 7 insights each have action steps, and then there's a whole page of actions that you can take at the end. But one of the big insights that, on first read is like, well, that seems kind of obvious. Why did they actually write that it is a best, or, our big insight was that
The strategy.
that having a defined strategy and plan are key to a successful practice. But when we looked at the data over and over and over again, when we sliced it by, we had a number of attitudinal questions that we added this year around whether or not you had a formal written plan at the firm level, whether or not you have a business plan at the CAS level. Are your firm leaders on board? Are they aligned? Are the partners who are referring and own clients aligned to your strategy for ideal client profile or your niches? And over, when we sliced that data, we saw that those firms that, are hand raising and saying, yes, we are doing these things, their average client revenues were significantly higher. They, they had strong net client fees per professional and strong margin. Their typical monthly fee, actually the median of the group that said that they have a formal written business plan, was $1,000 higher than the all respondent group. I mean, just over and over, we saw that these groups had stronger growth.
Yeah.
And again, on first read, it seems obvious. Oh, have a strategy, have a plan, you'll do better. But it really is part of being able to take the time to work on the CAS practice and not just working in the CAS practice, to kind of cite that old adage.
It is interesting looking through these insights, and I've got a physical copy of my benchmark survey right in front of me here, so I will be referencing this. But you're right. There are a lot of correlations in the data to things like having a defined strategy and that resulting in higher revenue, higher margin, more revenue fees per client. I'd love to walk through some of these insights and get your thoughts on them, because like you said, some of them may seem very obvious, and I like to take a look at what can we take out of this? What action should it be driving? And I know you've got a lot of actions at the bottom, but let's have a conversation about it. So on insight number 1, CAS growth continues to be significant, outpaces the profession's overall growth. You see a trend from 2018 through 2024. Top performer, median net client fees have gone from about 1.5 million to just under 3 million per year. You also see double-digit revenue growth continuing from 2018 through 2024. One interesting thing that I was looking at there is that top performers' revenue growth in 2024 was 15%, yet all respondents was 17%. So,
That's a trend we've seen over the 4 surveys, is that growth in the space is high. When we think about those top performers, one of the things that we have hypothesized and talked to, dozens of firms about, and so we don't have necessarily, as hard of data around this, but I feel pretty confident saying that the top performers are growing just a little bit more slowly for a couple of reasons. One is that they're really intentional about the way they want to grow. So once you have defined an ideal client profile, once you've selected a niche, you really start thinking about right fit clients. As a result, maybe you don't take as many new clients as someone that's just sort of growing with wild abandon. Maybe your growth is not even from new clients. Maybe your growth is around adding services for clients.
Sure.
For top performers, I think, tend to be a little bit more intentional. They have a slightly longer view of where this is going to go. When we think about what's happening in the all respondent space, we believe that there is still a lot of price adjustment happening. So even if you didn't take on a lot of new clients, if you adjusted your pricing, because overall, we still think that most CAS practices are probably underpricing awful lot of their services. So as we continue to get to a right price sort of level, this is also part of the growth that we're seeing. There doesn't seem to be as much price sensitivity in this space as maybe some of the other spaces that CPA firms are working in. It is still a new area. Clients come to you, and I think you can speak to this better than I can, but clients are going to come to you with a lot of needs, and they may actually have trouble defining the needs that they have. They just know that they need help.
How do you manage the outliers in the data set? 'Cause when I look at double-digit revenue growth continuing for CAS practices, I look at it through the lens of our standalone CAS practice, who is small, and so relatively speaking, our growth percentage would actually be much, much higher than any of these figures because we're coming from a lower base. And so I'm like, all right, well, we grew 8 times the median. We're doing great. But at the same time, it's like, well, that relative growth to a larger firm would be like 1%. And so how do you manage taking those outliers and then putting it into an understandable and actionable format here?
So, let's just talk about survey data and how we present statistics, right? When the data comes in, we anonymize everything so that we can really just look at the numbers and not be swayed by, oh, but we know this firm. And we take a look to see, did they answer all the questions, or did they answer the questions that we need? We look to see if anything appears to be a mistake. So sometimes you get a survey response that is off by a factor of 10. Somebody forgot a 0.
Yeah.
So fortunately, we do have a small team, that has access to this, and we're able to, when we find something that doesn't seem right, we're able to reach back out and make data corrections. So part of the reason that the quality of the overall data set is high is because we really watch the data as it comes in to ensure that anything that is just an error gets corrected. Then, when we finally close everything down, we go through the data and we really look for anything that just appears to be wrong. That's not to say that we throw out small firms, because they're not wrong. They're just small.
Yeah.
We're not throwing out folks who had a crazy wild growth year. That's not sustainable, but it's real. And so we look at all of that data, collectively. What we report in this survey then are medians. It's tempting to talk about averages. And technically the word average doesn't actually mean mean. But, so we don't report those means, because what could happen very well would be a distortion of that. When we start to look at those medians, then it's one of the reasons that I always remind everybody that this is benchmark data. This is a survey that was self-selected. Folks had to opt in, had to take the time to submit, to do to pull that data together to be able to submit more than 70 questions. So I'm going to pause right here and thank anyone who is listening to this podcast who participated in particularly this year's survey or previous year's survey. Thank you so much for being part of this. Obviously, we are able to draw insights, learn so much, and hopefully give back into the profession because of this. And thank you especially to you, Roman, because you completed this year's survey.
Yeah.
I would also make my plea for future years' surveys. It's a little bit of a lift, but I do think that there is, when I talk to folks who've completed the survey, they talk about going through the process of gathering the data can be really useful internally when you think about your own metrics. But your question was, how do we deal with outliers? How do we prevent distortion? And the answer, quite simply, is because we look at medians. Your practice revenue may be very different than the median practice revenue. And it's one of the reasons that we're so excited that for folks who take the survey, they can actually log back into the survey platform. They can slice and dice that data to get a subset that is actually something that they can compare themselves to.
Okay.
So, when you log back in, Roman, you can actually say, I only want to look at practices whose revenue, where the CAS practice revenue was pretty similar to mine.
Yeah.
Long answer. Does that?
That's super helpful. I actually didn't know that I could log back in and then slice it by firms my size. I'm going to do that because I'm curious and I want to know, where are we relative to other folks in the space? And then where should we be aiming? One thing that I actually often tell clients who ask about benchmark data for their industry or certain metrics that they have is that I want to go through an exercise of planning and developing strategy first before looking at any benchmark data, and then look at benchmark data. Because if I'm just predicating my goals and strategy based off of benchmark data, then I'm really just going to that median, like you said, and not trying to become that really high performer. And so oftentimes I actually say, let's look at that after we go through the planning exercise.
It's one of the reasons that we report top performers in this survey. And to clarify, top performers in this survey were defined as those whose net client fees per professional, in other words, revenue divided by FTE, was the top 25%, the top quartile. Not everybody who is a successful CAS practice meets the threshold of top quartile. A couple of things can happen. When you are in a big growth stage, you've done a lot of strategizing, you've done a lot of planning. It is a best practice in CAS to try to add your headcount, add your staff before you add clients. You want to get people up to speed. You want people to have the industry knowledge. You want them to be familiar with the technology. So as soon as they take on client work, they hit the ground running and offer that amazing experience for your clients. When you're in that growth phase, it kind of tanks your net client fee per professional number, because your revenue divided by your FTE, that divisor, that bottom number, as it goes up before the revenue comes up, we see, high CAS margin, or we see, firms who had an amazing amount of growth whose net client fees per professional can look really bad. And it's another reason to remember that these are kind of snapshot point in time. So when you look at your own firm, we talk so much about what are the best metrics to be looking at in CAS. Well, part of the way you want to look at your metrics in CAS is that you don't want to look at one snapshot. You really do want to look at those trend lines, what's happening over time.
That anecdote hits so deeply to me right now, because I look at our revenue per employee relative to what I see my peers in the space doing, and I'm like, oh man, we are so behind the curve. However, to your point, like, we're in a growth phase and we need to bring people in, we need to onboard them, and it feels like we have been in a constant state of onboarding of new clients and new team members since day one. And it feels like we're still behind on that. And I don't know when that catches up. Maybe it's a period of when you're intentionally strategizing not to grow as quickly, to your point of how the top performers may be doing, in order to reach more of those, top performing metrics or benchmarks for revenue per employee or things like that. But that's relatable.
I said earlier that I've spent a lot of my career looking at data and thinking about how data informs decision making and planning. And how do you teach? How do you grow? And one of the things that I have observed for years, and what you're saying correlates to this, is that growth is very stair step, right? You have one thing goes up and then it plateaus. Another thing goes up and then it plateaus. And I think that when we look at the way, adding headcount, adding technology, adding clients, all of these things, and then maybe you pause all of those things while you look at the strategy and you adjust your fees, or you do some upskilling in order to offer more services. And I don't know when you would ever get to a more linear kind of growth. Maybe it is, when the regression puts you at a place that everything is so big that the stair steps become so small.
Yeah, I don't know. I think you probably see less of the stair step approach and more of the productized solutions that exist in market. And I don't know if we would define those as CAS practices or not. They're really like more software than services in a lot of ways. We won't go that direction.
Yeah, I was going to say, it's one of the things that we do talk a lot about at CPA.com, though, is how do you productize these CAS services? And one of the things I think that we can still see in the data from this benchmark survey is that firms that are thinking about how do I use technology and how do I standardize and how do I get to a place where the services that I'm offering are really high quality, repeatable, high value types of services, they may not look like the same kind of productized situation that we would have in a software or a SaaS kind of situation. But it certainly is more productized than perhaps a true consulting where every engagement starts from zero.
And I think there's becoming a lot of delineation in the industry around that right now. And it kind of goes well into the insight number two of firms increasing revenue by expanding their higher level service offerings. So more business insights, more CFO, more of that strategic layer. And it's interesting to me dissecting what I would call more of that software led or productized approach. It's not that it's just hyper templatized. I think that the more productized approach is far less relational driven. It's far less strategic in that you have predominantly a software that is forefront, that is providing a visualization or some sort of automation on data that's coming out of a company. And the software is then kind of dependent upon utilizing insights or AI layered over the top of that to provide some sort of like analysis, right? Here's your trends, here's month over month, here's a variance report. Like technology is really, really good at that.
Mhm.
When I look at firms that are excelling in the higher level service offering space, I think of folks like Jody Grundon and what he's done with Summit and now Anders of really creating repeatability in a strategic function that's predicated upon a great relationship. What are your thoughts on that?
You know, I have seen some CAS leaders in the past few years who have been acknowledged or given awards within a particular client industry. And I think, gosh, that's, like CAS goals. Can you be the person or can you be the firm who is so embedded in an industry and has such great relationships with those clients that what you are doing layered on top of what that software can do with you, where you have that best of both worlds, where you are able to use the software to do something that is a relatively standardized approach, but also creates that level of relationship. And sure, at Summit by Anders, those guys, they have their niches. When I talk to different people on those teams there, they have great relationships as well because the AI and the technology that they use can do some of that early lifting so that their time is spent on the relationships as well. It was one of the big things that we learned in this particular survey. We had really three questions around service levels that were really interesting. I told you there were a couple of big, sort of surprising things. The first one was this idea that high percentages of the survey respondents said that they can offer CFO level services and business insight services.
69%.
Yeah, I was going to say greater than 60% on both of those. The second question then was really kind of a confidence question. Do you feel that that you are offering good value in those areas? And those numbers dropped.
Yeah.
And that was a little bit surprising to us. And so, we spent some time kind of digging around that. But it was the third number the third question that really kind of brought it all together, which is what percentage of your revenue is coming from those higher level services? And it's a really low number. It's like less than 8%, probably honestly closer to 3 or 4%. What we began to understand is that so often that level of insights advisory is happening in a reactive kind of way.
Yeah.
Can we do that? Have we ever done that? Yes, we had this one client one time that we were able to do this with. Are we offering it proactively? Not very often. Are we standardizing it? Probably not. Again, this comes back to planning and strategy. You and I have talked about this before. Like you built this into your plan from the get-go. But if we have a firm that's been doing this for a long time and they've really spent their time focusing on building up the muscles and the processes around the transactional accounting and the controllership level, they may be doing some of what we think of as almost like CFO light.
Sure.
Fairly regularly. But the planning and the strategy to get over the hump into the business insights CAS, it requires a lift. It requires some upskilling. It requires a plan to get there. It may require some different software even. And so, we see that these firms are saying, can I do it? Sure. Am I doing it? maybe not so much. It's a great opportunity, though, that as you know, when we look at where the next sort of phases of growth for the profession are going to come from, we think that moving up that spectrum of services to be able to offer that to clients. You told me recently that you've had a bunch of new clients in the past, few months. And it seems to me that they're wanting some of this, right? They don't just want outsourced accounting.
That's right. That's right. And we're seeing a hunger for that just across the board. A lot of more anecdotal data for us, but conversations that we're having with companies that say, yeah, I've got a bookkeeper, but I'm just not getting a lot out of that. And I feel like I need to glean more insights out of my accounting function, out of my finance function. And these are, 3, 5, 10, 15, $20 million businesses that have committed to outsourcing their accounting and finance department, maybe with 1 or 2 internal hires supporting a key function. But they're starting to realize that we need more out of this function in order to run a sustainable and profitable business. And so we're having those conversations every day. And one of the maybe more rhetorical questions that I ask myself after hearing you talk about this is, okay, if only 8 or sub 8, maybe 3% of revenue is actually being generated by CFO services, yet 69% say that they have the capability of offering them or do offer them, that's telling me that internal to those CAS practices, they don't have clear definition around what they actually do for their clients. And they just kind of step into these roles, yet there's no way for them to actually track what type of service it is on the background. And actually, on this podcast, I talk a lot about the importance of having a service library, effectively a list of SKUs of all of the services that you offer, and then capturing the data on that so you can understand, where is our growth coming from? Where are our margins coming from? What are we actually doing for this client? Even if it isn't a value-based pricing model where most firms would be like, yep, we'll just lump it all up into this fixed fee. And then it's just one fixed fee accounting line capturing a bunch of different data points that they're not actually doing anything with.
I love working with folks in the accounting profession. You know so much about what you're doing, and you often forget that you know so much more than your clients do. And I think that, when I looked at those data points about we can do this, we feel confident about doing this, we're generating revenue from these higher level services. One of the things that I know over and over and over again is that as folks in this CAS space, you can offer real value to your clients. That you have the tools, you have the knowledge, you know how to ask the right questions and get to answers that really provide great value to clients.
And I do believe, for us at least at Full Send, that service library is an internal facing document for our own data warehousing and data aggregation. This is not something that we're publishing in mass quantities to our website or talking about with clients. We still want to take a value-led approach to pricing and scoping and really truly discovering in a customized way what the client truly needs to be successful, and then fit our SKU map to match that in a scope. I don't know to what degree, like, we can get into the pricing and niching and how those things work together, but you see a lot of firms going with medallion-based pricing, the bronze, the silver, the gold, and here's what's included in these things. And I personally don't love that approach, but I think a lot of firms could actually benefit from having standardization of what they do and how they do it. Are you seeing more firms take that fixed fee approach, that value-based? We're still seeing a degree of time and materials. Thoughts around pricing?
Sure. So again, one of the things that we, when we did the data analysis, I actually thought this is wrong. Like, I have to go back and check my work. I actually sent it to somebody else and said, seriously, this is not right. The pricing numbers. So insight number 7 in our report this year is just that the pricing in CAS has shifted away from pure time and materials billing. We saw in the inaugural survey in 2018 that more than half of our respondents there had a primary billing method that was based on time and materials. That dropped to about 25% in 2020, 27% in 2022. This year dropped to 10%.
Mm-hmm.
What that tells us, we the majority of them have moved to kind of a fixed fee approach. A lot of them are still doing after the fact billing. So, the client knows what the fee is going to be in a month. And then if there's a scope change, they have change orders, and they bill at the end of the month. We'd like to see more go to, kind of a pseudo subscription model where they're actually paying in advance, and then you do some adjustments along the way. Because we know that fixed fee right now for many, many, many of this 90% of firms that are not using a primary method of time and materials, we know that they have kind of an hourly calculator, cost calculator under the covers that's driving that fixed fee. But it's changing the conversation with clients. I think that's the biggest thing. And it's changing the internal conversation as well. Because even though they are still tracking hours, they may not be tying those hours quite as closely to the way that the billing is working as they have in the past. It's a way that they can start to shift things. And so this particular insight was really exciting for us to be able to say, we've positioned this as a best practice for a long time, that an hourly billing with write-ups and write-downs is confusing to clients. It's hard for clients to budget around. It's hard for you to make improvements because if you have a big improvement around technology that drops the hours that you're doing on something, it's really hard to reflect that in the way that you price with your clients. So moving away from time and billing has been an important part of this.
I love that the data is pointing this direction. It's something that I was heavily convicted in when I was starting my firm. I think this is the right approach. And there's two reflections that I have on that. One, I think when we look from a macroeconomic scale and just look at our personal lives, almost everything that we purchase and consume in our normal lives are on subscription.
Yeah.
And it's becoming more and more that way. I'm slightly seeing a trend of moving away from subscription and into usage-based, which is kind of interesting just with the rise of AI models and how the tokens and credits work there and usage-based pricing. So I'd be curious to see if there's going to be a secondary trend in maybe CAS 3.0 of what that looks like. That's another discussion 10 years from now. But then the other thing, I had a conversation with a prospect yesterday who has been working with the same firm for a number of years, and he said they're good. They're good. However, this is maybe a $15-20 million company. He said they've been able to get the work done. However, they haven't taken the extra step to instill process, to instill systems, to instill efficiency in our financial department. And for the same section of work for the last several years, we've been billed roughly the same hours every single month for that. And it'll vary based on other things that are happening in the business. But he's like, I would think that over the course of the last 3 years, I would see that, some tranche of work would actually decrease if our business isn't just skyrocketing. And so he's saying, I believe that they're disincentivized to improve our finance function because of their own revenue model. And this is a fight that he's been having with them over the last several months, which is why he came to us and said, I think that this approach makes more sense for us. And I like the way that you think about things. Let's talk about how does your firm serve us differently than somebody who's take this different approach? And from an ethos perspective, how does that impact us as a client? So we're having these conversations on a day-to-day basis. And I love seeing that more and more firms are going that direction.
Yeah, we actually have another insight that came out of the survey this year where we saw that firms who are reporting that they have defined client niches that they really focus on have better efficiency, better profitability. We saw that for firms who are focused in specific niches, their median CAS revenue was significantly higher. We saw that they reported that the referrals that they get tend to be better client referrals. And we saw that their growth was higher. So when you start talking about being disincentivized to look for ways to improve process, if we are already focused on strong standardization within a niche, I think, what we can turn around and do is really, instead of being concerned about improving processes for a particular client, we can actually focus on the client and say, hey, what do you want out of this relationship? How fast do you want to grow? How, what's keeping you awake at night that just trying to get you, the bare minimum, we didn't have that conversation about this other thing that was keeping you awake at night. We have all of this under control. Let's talk about the rest of it.
Yeah. I love that. And there is so much in this document right here that is widely available for everybody to take a look at. I'm personally very thankful that you and your team have taken the onus upon yourselves to put this forward in the market, because I haven't seen anybody else doing this. And so to be on the forefront of capturing data to help firms be successful, to help them grow, to help them be more profitable, to help usher in kind of this next generation of what firm growth looks like, I think is a massive service to our industry. So thank you for that.
Yeah, CPA.com's CAS professional services area is really committed to helping this segment of the accounting space continue to grow and to find its footing, and to help more clients. I mean, that's kind of at the end of the day, but we hope that you as practitioners are driven by wanting to help your clients and wanting to do it in a way that gives you success, but also maybe some balance, right? We see some of the things that the profession is fighting with burnout, and CAS has the potential to kind of be the antidote for some of that. So whatever we can do at CPA.com and at AICP to support this becomes kind of an important piece of what we're about.
Yeah, I love it. Well, I will link to the CAS Benchmark Survey in the show notes. I will link to other CPA.com resources as well. Amy, if folks want to get a hold of you and want to hear more about what you're doing at CPA.com, where can they find you?
So I am Amy Bridges, and I am amy.bridges@hq.cpa.com. You can email me directly. If you have questions about the benchmark survey, there is in the survey report, there is an email that they can reach out with questions about the survey as well. Our website, cpa.com/CAS, we try to make that really easy as well, has a lot of the other things that we're doing, including, our CAS 2.0 white paper where we define some of this. Our benchmark page also has a really nice glossary that we've put together. And I kind of want to push that out as I think it's a good resource to have conversations. So much of what we do at CPA.com is also trying to empower firms to have those kinds of conversations within their firms. We know that CAS needs to be supported by really good change management. And so, we have a CAS firm self-assessment, the CAS definitional white paper, this glossary of terms. Like, some of these things that we're doing really are there to try to support conversations that practitioners can have within their CAS team, within their firm. And then, we have some other opportunities to work with those firms if that's what they deserve. I want to make one more plug if I can.
Yeah.
So there is a webinar that we will be doing with a deeper dive into some of the numbers. We're also going to bring some practitioners on January 30th, and that will be available as a replay after that date as well. So that will be on our website too.
Perfect. I will get that webinar linked in the show notes as well for a quick link to anybody that wants to check that out. But Amy, thanks so much for spending the time here today on CAS Minute.
Always a pleasure.